Hey guys, it's Jim from JAGfx.com. Today's video, which is on the Thursday 28th of June 2018, I just want to go over Hidden Divergence. The reason I'm doing this video is in the last few days I've been having a real good look at Hidden Divergence. Now, it's something that I think I've been missing on my charts, and there's a reason for that. I think what the problem is got too much happening on my charts, too busy with the MAs, all the indicators, etc. So what I did in the last few days was strip back my charts a bit and just concentrate on looking for the divergences. Now, there's basically two types of divergence. There's hidden divergence and regular divergence, and they're both split up into hidden bearish, hidden bullish, regular bearish, and regular bullish. The regular divergences are easy to spot, for me anyway. Hidden divergences are a little bit trickier. Normally hidden divergence, if you remember rightly, is when the trend's continuing. So here we have a hidden bearish divergence. So I've just written down a couple of little cheat sheets on my book that sits beside my desk, and basically when price is heading down and the MACD is heading up, or the oscillator you're using is heading up, then you expect price to continue down. So it's bearish. Anytime you see bearish, we're selling. Bullish, hidden bullish divergence, price is heading up, the MACD or the oscillator is heading down, you expect price to continue up. So it's just a continuation of the trend. That's the plan anyway. So it's hidden bullish divergence and hidden bearish divergence. So yeah, just something simple like this is something similar I got in my book on my side of my desk. So I just keep on repeating: price is up, MACD's down for bullish, and price is down, MACD's up for bearish. This is just hidden divergence, not regular, just hidden. Like I said, it's hard for me to spot, so I've been just practicing, spent hours. So this is gold daily. So I've got a gold daily chart on here. Now, normally my template looks like, my high probability one looks like that. So I've got a lot happening. Got the three MAs, I've got the JAGfx RD. It just gets busy, it gets hard to spot stuff in there. Even if I take the JAGfx RD out, it still makes it a little bit hard to see. I'm not sure what those trend lines are. Must be on a template somewhere. So, so what I've done is I've stripped it right back even further. So I've got a new template here for divergence testing. So all it does is leave the QMP filter on and the MACD platinum. So basically I use these dots on the QMP filter and the dots or the highs and lows on the MACD platinum to signal my divergence. They're my trade signals, most of you already know that. So what I do even further, say I was only going to concentrate on bullish divergence, so hidden bullish divergence. So all I do is go to my QMP filter, into the settings, and just the red dots, I don't want to see them, so I just change the colour to none. So I just leave the green dots. None gets rid of the green dot, the red dots. So now I can just put all my effort, all my concentration into the green dots. So what I'm going to do now is go back in time a bit. This is, as I said, this is a gold daily chart. So we'll go back to, I'll pick a spot where it's a bit there. All right. Now, bullish, hidden bullish divergence. I'm looking for prices up and MACD is down. So all I have to do is look at the green dot and see if the next one's higher. That tells me it's up. Then if that's the case, then I just look at the MACD, and that's got to be up, down. In this case, it's not. So here's a perfect example to start with, which is good. There's your low. There, green dot. Next green dot's higher. So it's a higher low there. And you look at the MACD platinum. Is it there to there? Take the buy there, your stop will be under here somewhere, and off it goes. Continuation of trend. So that's a good start. Looking for higher highs, high green dots, and lower MACD. Always plenty of regular bullish divergence. There's one there. But that's not what we're here for. Here's one, a good example. Across those lows there. So price is heading up, as you can see, it's obvious. And MACD is heading down. And with the MACD, as long as one end of the divergence is on the correct side of the zero level for buys is below the zero level, so this one here, the second part, the end part, is below the zero level, take your buy there, and look at that, nice big move up. And you could even say there to there by looks, no, there to there, it's a bit ugly. Jim. Yeah, you'd probably be stopped out there and it would get a bit messy. This looks like a setup, not a good one. Right, let's keep on looking. Prices up and MACD's down. Prices up and MACD's down. So I can see a trend coming up, so this is probably a place where it will be. I can see one already. So there's your first low, there's your second one. So price is definitely going up. And MACD's down, not much, but it's enough to give you a buy there, take that. And this is followed directly behind that one there. There's your low, there's your higher one. Yep, that is another trend line, there's this one. And again, MACD's down, take the buy. Look at that, beautiful. And you could even go over to here, from there to there, still a high low, and there to down and there. And there's another buy, not a great one, but it's still a valid signal. Look at the high prices, lower MACD. High prices, lower MACD. There's one, another one there. Across there. And across there. There's your buy in there. Not a great one, but still 600 odd pips on the gold, which is not too shabby. Prices. Price. No. There's one here. I'm not sure if it's a great one, but certainly qualifies. And lower MACD, high price. Probably wouldn't get much out of that one. Doesn't really go up before it falls. Depending on where your stop is, you probably have your stop below these lows here. Could have stayed in that trade and possibly considered a second entry even if you wanted to. Goes up again nicely. Right, let's keep on going. Look for higher price. There's one here. Like I said, they're not easy to spot. Well, not for me anyway. There's definitely a high lows there, and a bit ugly, but in that area there. Take that buy in there and off you go. Not ideal, but let's have a look. Price is up and MACD's down. Price is up. Price is up. Price is up. No, nothing there. You really need an uptrend. Price is up. Probably the smart thing would have been to prepare a heap of examples before I started the video, but I like doing it this way because it shows you that I'm not cherry picking at all. Alright. Plenty of regular bullish divergence, but not much in the way of hidden one. Plenty of regular. Price it up, make these down. Price it up, there we go, there's a good one. Cross there. Prices up, high lows, and MACD's down. Clear, very clear signal. Good one to take. Nice trade. And followed right. Next one is regular bullish divergence. Another good trade. All right, let's have a look. Nothing really exciting in there, so we'll just switch over to get rid of all those, and we'll have a look at Bearish. We'll stick on the gold daily chart. I'll just get rid of the lime green, the green dots. So all I've got now is red dots. We'll go back in time. Now with Bearish, prices down, MACD is up. Prices down, MACD is up. So starting here somewhere, prices down, MACD is up. So we'll start with a good trade first up. Prices down, looking for MACD is up. Yep, what I'm doing, Jim. Wrong side of the MACD. So prices down, MACD is up. Take the sell. Not a great trade, but still a viable trade. Look, the price is down, MACD is up. Down, price is down, MACD is up. Still looking. Nice triple top. No. Or triple top here. First one may have not taken that trade for whatever reason. Second one definitely would have taken that, would have kept in because your stop would have been up here. Third one taken it and rode that down. Going to look at a lot more at double tops, triple tops, double bottoms, triple bottoms. But I digress. Price is down, MACD is up. Price is down, MACD is up. Let's find one of them. Price is down, MACD is up. Here's one in here, probably a couple actually. There's your first one, trend line, price is down, MACD is up. Take the sell, you would have stayed in that. There's your second one, still price is down, MACD still up. Take a second trade, you're in. Good trade. Price is down, MACD is up. Price is down. Now this is where you could start having a look for these sort of wider ones. Look, I could probably use that high there, but if you use that one, because technically that's probably a better option, and that's that one in there, so that's the corresponding dots. Price is down, lower highs, MACD's up, take the sell. Even if you use that other one that's there, still qualifies. Still qualifies. So it's still a sell trade no matter what. So price is down, MACD's up. Here's another one here. Price is down. Not a good one this one though. And MACD's up. And there's your entry in there, down there, whatever. Not that flash, but still a valid signal. Price is down, MACD's up. Here's another one of these little tight ones in there. There's your lower highs, price is down, and that's the corresponding in there. Take the sell. Probably wouldn't get much out of that. If you go down 400 pips, nothing to be sneezed at. It's gold. Prices down, MACD's up. Prices down. Here's one here, nice one. Across there, lower highs, and you could either go from that one to there, or you could go from that one to there, which is that high there. Still the same result. Take the sell with the trend. So you get the idea. I'll just switch to another pair. I had another one, pound Aussie daily chart also. Let's look at the bullish ones. So what did I say? Just get rid of this. We'll get rid of the red ones. So bullish. What did I say? Price is up. MACD is down. Price is up. MACD is down. We're looking to buy. So probably a good start there, I think. Price is up. MACD is down. That one, didn't even see that one. So that's a good one. And there's a great double bottom from that one to there. Like I said, I'm looking at these more. I'm sure if there's red dots up here somewhere, double top, definitely, or head and shoulders, whichever way you want to look at it. Anyway, I digress. So what am I looking for? Price is up, MACD's down. Price is up, MACD's down. That's a really good setup. There we go, there's a good setup. Price is heading up, higher lows. You can see, just price is heading up, it's obvious. And MACD is heading down. Big divergence, take the buy, stop under here, keeps on going up. Price is up, MACD's down. That's what we're looking for. Prices up, MACD's down. There's one here. Price is definitely heading up slightly. Higher lows. MACD going down. Take the buy in there. Not a huge trade, but still a winner. And a valid signal. Triple, double bottoms along here. Even that, technically, that's probably signal there because you've got double bottom and lower on the MACD platinum. So there's a buy definitely. Whether you consider a double bottom or a hidden bullish divergence is up to you. So looking for bullish, prices up and MACD's down. Here's another great example. This is the trades you crave for. You may have been stopped out there. We'll look at the setup first and I'll show you what to do. So there's the setup there, buy. You can see high lows, MACD's down. If you did get stopped out, if your stop was that close in here somewhere and you just got stopped out, then don't stress out too much. Just draw some trend line somewhere across the highs. It doesn't have to be, like I said with trend lines, not an exact science. Even if you get in a bit late, you might let that candle burst through, then go on the open of that smaller candle there and take that. You're still going to make up that loss. You know, considering that loss will be that many pips, which is say you lost. It's a big stop, 400 pips, say roughly. Look at that, went up 1,300 pips. This is a daily chart, so don't get stressed out about the big stops. It all comes down to your trade management, your risk management. So, oh, it's a pound Aussie still. So, yeah, that's a big mover too. Bullish, prices up, MACD's down, prices up. Here's another one, I can see it. Any of these ones here, so we'll take that one. MACD's definitely down. Look at price. Go from here. Could have gone from that one. We'll go to that one. Take the buy. Take the buy. It's fairly straightforward. Like I said, I was having trouble spotting these because when my chart's all cluttered up, with that. I just find it too hard to spot them, so what I'm going to do is I'll set up a couple of profiles just with either red dots or green dots, and I'll just flick through the charts so I can have a good look for analysis. Then I'll go back to this chart that you're looking at now and take my trades based on other stuff, you know, like I'm just not going to take them blindly, but I'm going to be a lot more aggressive and look to take buys and sells possibly at the same time. When you combine what I just showed you with, you know, we were just looking at either bullish or bearish, so if you combine both, then look at also regular divergence, your double bottoms, triple tops, all that sort of stuff, then just your bread and butter high probability trades, there's going to be quite a fair bit of trading here. So just something to look at, guys. So if you're having trouble with hidden divergence, it's not a bad way of doing it, and just practice. I've spent hours on these charts, and I'll tell you, I'm seeing red and green dots coming out, mate, bleeding out of my ears, but it's the way to do it. Practice makes perfect. I can't rave on enough about doing time on the historical charts, or even getting on the simulator and doing exactly the same thing. Anyway, guys, hopefully that's been of use to you, and let's get stuck into it. Cheers.